Hey everybody, it's Alex Miller at Capnion here. There's a consumer price index print in the news today. It sounds like core inflation ticked down a little bit, which is nice. I'm not going to comment on this too much directly, but I'd like to talk about why these sorts of data releases about inflation, and more broadly, why monetary policy can tell you a little bit about where the world of AI is going to head. So, first, is let me give a little background. The Federal Reserve and policymakers in general would like vaguely to dump enough money in the economy that everybody's spending money and having a good time. But if they dump too much money in the economy, there's too much money and not enough stuff to buy, and you get inflation. Everybody loves money, everybody hates inflation. So, what's the meaning of how people react to these sorts of inflation numbers? If inflation is bad, it means that the Fed is going to get stingy and not pump money into the economy. If inflation is down, well, now we can have some fun. The Fed is likely to turn the faucet on and pump more money into the economy. And really important place from the perspective of artificial intelligence that money might end up is in the hands of investors investing in AI startups. This is all very general, and you could really say this about any business. Why is this interesting for purposes of AI? These AI companies are not making money from what they charge you to use their LLM. They've raised massive amounts of money from private investors, venture capital investors, and they're probably supporting these services at a loss. So they're in a position where they need to keep raising money from investors to do what they're doing. And they're hoping that they can play this game long enough to get AI established enough that they can then raise prices or offer different product or make some kind of pivot into a company that's profitable in the way that your grandfather thought about business. So they're hungry for investment capital. A lot of the culture of how these businesses operate formed between the 2008 financial crisis and pandemic, when inflation was kind of freakishly disturbingly low from an economics professor's standpoint. And the Fed had its foot on the gas pedal, pumping money into the economy kind of forever, and people got really used to that. So this is why you see a lot of rise in conversation over that period of time. And talk about unicorns. A unicorn is a private company worth over $1 billion. There was just a lot of money sloshing around that people wanted to invest in edgy new companies, and you could go a whole long time not making money and just always scaling and trying to conquer new markets, raising more money from venture capital investors. Had a lot of space to do that for a long time before dark forces started to circle you and say, hey, do you really know how to make money? And I'm not going to go into it too much, but if you heard discussion about WeWork vaguely imploding, that's the story of what went wrong. They raised lots of money and got really big, and then, oops, we don't really have an idea how to actually be a profitable company. So what about this is specific to AI? AI is hot. AI is the only thing, it seems at times, that these kinds of investors really believe has legs right now. And so, apropos of this conversation about unicorns, private company over $1 billion, that's a big deal. Companies like OpenAI, which are currently pretty key to the generative AI wave, they're talking valuations of over $100 billion. And that's great for them. There's a little bit of danger that they're in the process of vacuuming up all the venture capital money in the universe. And of course, the next thing, and you hear discussion of this, is they have to become a publicly traded company. But how much time do they have before they need to do that versus want to do that? So let me bring it back to this CPI print. If these numbers keep coming in optimistic, that makes room for the Fed to dump more money in the economy. A lot of that money is going to end up in the hands of these kinds of investors. Companies like OpenAI are going to have a good time raising money forever, setting that money on fire to sell you cooler and cooler science fictional AI stuff at a loss for a very long time. And that reckoning about what in here is really cost efficient enough to make a business your grandpa would understand. They got a long time. They can play that game a long time like they're playing it now. A kind of scenario that could spiral into something like AI winter is there's all kinds of forces right now. Maybe something goes wrong and we give ourselves a bunch of extra inflation by accident. So one of these CPI prints comes in really high. This puts the Fed in a position where they need to vacuum money out of the economy. And that's almost certainly going to trickle through and limit the behavior of these venture capital investors that support companies like OpenAI. And if that were to happen quickly and suddenly, these companies could be faced with a crisis where they can't raise the money unexpectedly to continue operating like they've been, scaling like they've been. They could face that showdown about pivoting to something more sustainable and profitable in a chaotic way. And conceivably, I wouldn't say it's likely, it could turn out that while LLM is really cool and has really high potential, it's just really too expensive for what people want to use it for. And that's an AI winter scenario where these things kind of collapse and we forget about them. AI is so hyped right now that it's easy to forget there have previously been two AI winters, one in the late 60s, one in the early 80s, when there's a lot of hype about artificial intelligence and a lot of people throwing money at it. And when that hype didn't come to fruition the way those investors expected, investment collapsed, those companies collapsed, research collapsed, progress collapsed. We stopped thinking about it for a long time. So, a good CPI print vaguely leads to a very manic AI maximalist, this AI boom future goes on forever. A bad CPI print, and especially an unexpected, weirdo, oddball bad CPI print, if you get enough of those, that's a harbinger of AI winter. And so if you think AI is important and relative to your business, well, I guess you should probably think inflation is relevant to your business anyway, but you want to be looking at this kind of monetary macro inflation information as one of a zillion hints about where the space is headed, because it's really expensive to operate these next generation models. And consequently, the AI world has a lot more to do with the finance world than